Hi, this is Prashil coming to you from Mumbai, and you're listening to the Equity Master Stock Market Wrap Up. In today's edition, I'll be taking you through what moved the markets over the week. So let's jump right in. CRISIL forecasts a positive growth track for India. The runway for India's insurance sector remains wide open. Sun Pharma's woes and its clarifications. And finally, will Jet Airways continue to fly? Now, a quick look at the broader markets. Asian and European share markets were trading muted as the earnings rally paused as a resolution to the US-China trade wars was said to be nowhere in sight. Back home, Indian indices too ended the week in red amid an uncertain global scenario and subdued earnings reported by the companies. With the markets out of the way, let's look at the key stories in focus today. As per CRISIL ratings, India's growth rate is likely to inch up to 7.3% in 2019-20, provided that there are normal rains and a stable political outcome of the general elections. India is expected to clock a growth rate of 7.2% in the current financial year, up from 6.7% in the previous year. CRISIL said that with the government, which is likely to stick to a fiscal consolidation path, the pickup in growth is expected to be only gradual. Stating that the fiscal health remains a key risk, CRISIL said the fiscal deficit is likely to be 3.3% of the GDP in the next fiscal. The deficit is budgeted at 3.3% in the current fiscal. As per the report, global crude oil prices are expected to soften to settle around $60 to $65 average per barrel in fiscal 2020 compared to $68 to $72 average per barrel in the previous year as average global demand slows down. Further, it stated that fiscal 2019 would be the second consecutive year of sub 4% CPI based inflation. From an average of 4.5% in fiscal 17, CPI inflation fell to 3.6% in financial year 2018. With inflation under control, softer crude prices relative to last year, CRISIL expects the Monetary Policy Committee of the RBI to change its stance to neutral from calibrated tightening and could cut the repo rate by at least 25 basis points from 6.5% currently. Continuing with sectoral themes, Moody's Investor Service expects India's insurance and reinsurance sectors to grow strongly, driven by strong economic growth and an evolving regulatory regime. It said that robust GDP expansion coupled with the current low insurance penetration should support double-digit growth for the non-life sector over the next 3 to 4 years. During fiscal 2018, total gross premiums for the non-life and life insurance sectors grew 11.5% to 6.1 trillion rupees, bringing the 5-year compounded annual growth rate to 11%. Liberalization of the reinsurance sector with the admission of foreign reinsurers since 2017 and the industry regulator IRDAI's steps to ensure that they can compete with incumbents. Further, regulatory reforms will also improve the sector's capital strength. Note that in 2015, IRDAI raised the ceiling on foreign ownership of Indian insurers to 49% from 26%. Encouraging global players to buy holdings in local entities. Besides, the government's launch of a new program in 2018 to provide health insurance for 100 million families is credit positive as it will help grow health premiums and provide insurers with cross-selling opportunities. It will be interesting to see how the insurance sector evolves from here. Moving on to stock-specific developments over the week, Sun Pharma was in focus during the week as it is currently embroiled in corporate governance issues. The company's stock is down over 40% from its 52-week peak back in September 2018. Now the whole saga started when a whistleblower in the company sent a 172-page complaint to the markets regulator saying that huge transactions of over 58 billion rupees allegedly took place between the company's distributor, Aditya Medisales, and the private companies of Sun Pharma's promoters between 2014 and 2017. On top of that, last month a note by Macquarie, an Australian brokerage firm, went viral which raised concerns among the investing community. The note raised questions about inadequate disclosures regarding the role of promoter Dilip Shanghvi's brother-in-law Sudhir Walia Sun Pharma's past links with banned traders Ketan Parekh and Dharmesh Doshi, related party transactions involving promoter Shangvi, and guarantees given to the real estate firm Suraksha Realty. However, the company has clarified on these allegations. The drug major said that its domestic formulations distribution shall be transitioned from Aditya Medisales, the current distributor, to a wholly owned subsidiary of Sun Pharma, and the change will be made effective immediately. The company also confirmed that neither any loans nor guarantees have been given to Suraksha Realty. Back in November 2018, a whistleblower had approached the markets regulator with the documents alleging various irregularities by the company, its promoter Shangvi, and others. The markets regulator reportedly is planning to reopen the investigation into the insider trading case against the company and its promoters, which was earlier settled through the consent mechanism. Moving on to another stock hitting the news. Jet Airways was in focus as Naresh Goyal, the promoter of the debt-laden carrier, agreed to step down from the airline's board if Etihad Airways, the company's partner, paid the right price for increasing its stake in the airline. Last week, Etihad had told Jet's lenders that it would buy the airline shares at Rs 150 apiece. However, Etihad's offer is not in accordance with the market regulator's takeover guidelines, which state that the open offer price must be highest of the prices decided by 4 parameters: the negotiated price between the buyer and the promoter, the average price of shares in the year before the takeover was announced, the highest price that the buyer paid in the last 26 weeks before the takeover announcement, and the average price of the 60 trading days before the takeover is announced. Etihad's offer was well below these parameters. Jet's woes have worsened with higher crude oil prices and intense competition in 2018. There are now even talks of merging the debt-laden carrier with the equally bogged-down national carrier Air India. Whether such a move is prudent for both the airlines remains to be seen. Whatever the outcome, it will be surely interesting to see how the domestic aviation space develops going forward. Well, that's all from us today. Before signing off, we would like to know if you like our podcast. Is there anything specific you want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Happy investing.